Hi, welcome to the Baker Boyer Monthly Market Update. I'm Ted Cohan, one of the senior portfolio managers here at Baker Boyer Bank. What I'm going to talk about this month is the election and the markets, and then also talk about money market and money market balances in people's accounts. And so I'll start out on the election side. I'm actually filming this video on election day on November 5th. So I don't know anything about the results. This should get out to your inbox in the next day or two. So hopefully, again, you'll have the results when this video comes out. But the main thing we want to stress is what we talked about also at the economic update when John Cunnis and I did it a few weeks ago. We also did a economic update video that went out a few weeks ago. We talked a little bit more detail about this, but I just kind of wanted to reemphasize the point that long-term, what we recommend is staying invested in the market. No matter who has been the president, whether it's been a Democratic president or Republican president, the market has continued to do well long-term. Also with Congress, it's been the same thing, whether the president, if it's a Republican president, if they have control of both the House and the Senate, or a Democrat, or it's a split House, the market has continued to do well long-term. So what we recommend is trying to take those political feelings out when you look at your investing, stay investing for the long term, have a good asset allocation. That's really the best way to build long-term wealth. On the money market side, I just wanted to touch base briefly on money markets. Typically at Baker Boyer long-term, what we've always done for the last several years previous to all the Fed rate increases is keep money market balances pretty low, between 0.5% and 1%, because money markets for quite some time weren't paying much interest. They were paying maybe 0.5% interest at best, so there really wasn't much reason to stay in the money market. What we've seen over the last year and a half plus is money markets have been paying quite well. We've been up over 5% for over the last year. Even with the most recent Fed cut, money markets are still paying a good yield of about 4.75. And so we've been comfortable with that money market balance continuing to grow a little bit. We do expect that to continue to grow through the end of the year. Typically, December is the biggest month for distributions from all of our mutual funds. Mutual funds typically pay either monthly income, quarterly, semi-annual, or annually. And so in December, most mutual funds are going to pay distributions out. And so again, we do expect that money market balance to even continue to grow through the end of this year. And then we will look at getting that invested early next year. So we just wanted to mention that. Don't be surprised if you see your money market balance continue to grow. So with that, I'll wrap up this monthly market update. As always, if you have any specific questions, please feel free to reach out to one of your team members at Baker Boyer. And if not, we'll be back next month with our next update. Thank you.